Okay, I think we're on. Let me make sure I got that. Okay. Perfect. Let's see here. So the link is out on Twitter. Hey guys, another surprise AMA, since you guys love them so much. I'm going to post a link on the Telegram channels. Just give me a moment, and we'll get started in just a few minutes. Meantime, you can look at my shiny head. Okay. All right. We'll start in just a few minutes. All right. Okay. Welcome, everybody. Thank you so much for coming in to the surprise AMA. I had a little bit of time today, so I figured I'd do one of these. The community seems to like it, so it's always a lot of fun. Anyway, I'll probably be here for maybe 45 minutes, an hour, unless we get some really, really good, deep questions, and I just keep rambling, and then I'll just go until someone grabs me or something like that. Totally unplanned, but that's okay. All right, so let's go ahead and get some questions going. And let's start from the top. Let's see what we got. All right, well, we'll start with probably one of the most interesting fights recently. It says, tell us about the Twitter fight with V. So no Twitter fight with V yet. But basically what happened was that we had a thread about Ouroboros. Vitalik posted some questions and concerns about Ouroboros. I answered. Vitalik answered back, and then I realized that Reddit probably wasn't the best of mediums. So I had a discussion with the scientists behind Ouroboros, and I said, could we write a formal rebuttal? And basically what we did was we sat down and tried to find as much information as we could about Casper, which was extremely difficult because there's lots of different papers. There's Vlad's Casper, there's Vitalik's Casper, there's like 2 or 3 white papers, there's some FAQs. Apparently there were some repos that formalized some stuff, but they've been pulled. And we made best effort to try to understand as much as we could about Casper. And we tried to do a fair comparison. But unfortunately, Casper is not written in a way that makes it particularly easy for an academic comparison between it and our protocol. So we did our best. We posted the rebuttal. Vitalik's response was to say it was pathetic, call us liars, and then say that it was some sort of hit piece. I guess he's not used to being challenged, and I guess he's not used to having an academic rebuttal. Makes sense because he dropped out of first semester and he never went through that process personally. But the rebuttal that we provided was what one would expect if they go through a standard peer review and they had submitted a paper or they asked a colleague to look at it. So anyway, we might write some more, we might not. It just depends on how we feel. But we think the things we said were perfectly reasonable, and we're pretty proud of our protocol. Some things that Vitalik wrote were quite strange, like we're violating the FLP impossibility theorem. Not sure how, but I guess he asserts that, and other such things. And, it is what it is. And we're pretty happy with our strategy. All of the Ouroboros papers have been accepted at major conferences. People from all over the world, from China to Japan to all the European countries to the United States, have looked at it. And we've gotten a lot of great feedback. Things like finality can be added. We already have a probabilistic notion of it. And we're pretty happy with the protocol. Also, a huge amount of work has been done to verify the proofs of the protocol, and that we have 2 different ways of proving the core claims of Ouroboros. Both have been published and gone through peer review. We also have formal verification of many of the proofs using Isabel, thanks to Colwyn's work at Cambridge. So there's been about 3 years worth of work that we've put into the effort, and we've gotten tremendous feedback from people all over the world, and we're pretty happy about it. One little caveat, Vitalik said, well, we could have simply emailed him or had a conversation about Casper. What's extraordinary about that statement is, despite the fact that we've been publicly working on Ouroboros for over 3 years, he never really reached out to us. We saw him at Financial Crypto. We saw him at the Bitcoin Winter School in Shanghai and other places. And despite the fact that we keep crossing paths, didn't really seem to care too much about asking our scientists in person about how does Ouroboros work, or if there was any potential to collaborate between the teams. But now that we're having a public rebuttal, apparently we should keep it to email or something like that. Or our rebuttal is apparently a hit job. So that's that. Good for them. And we're just going to keep chipping away. We got some great things coming for Ouroboros to accelerate downloading the blockchain. We got some things to add some accelerated transactions, get better finality with them. We got some things coming to add sharding to it. And we're really excited about the future of the protocol, and the science really looks beautiful. And we're starting to get to those fine-tuning pieces to make the protocol really awesome. And we're extremely excited about the formal verification side of things, where we can actually write a spec and prove some interesting properties out. Our formal methods team is just salivating at that opportunity. So overall, we're on track. Things are looking good. Science is looking good. And I look forward to seeing everybody at Crypto and at CCS and future conferences. Thanks for all the support. Okay, let's go through. Okay, one mobile wallet, one ledger. Okay, so this is a real good question. So the Haskell code that we have isn't so good at the moment for mobile devices or ledger devices or ATMs or Intel SGX or these types of things. And we recognize that, and we realize that it'd take quite a bit of time for us to get some form of a unified wallet architecture going. And that's a slightly orthogonal task to the task that we have to introduce smart contracts and full decentralization to the system. So what I didn't want to do was create sequential dependencies where we basically said, all right, well, we'll do decentralization smart contracts, then we'll get back to the mobile wallet. We had enough resources to go parallel. So I ordered the construction of a Rust version of our code base. And we're going to do our first demo of the command line interface come September. There's also a wallet coming out very soon. We'll make an announcement about that August 15th based on the Rust client. So basically, that's going to be the foundation, I think, for our mobile strategy over the next 6 to 9 months. And we've already tested the Rust code on Android and iOS. It worked very well, and we think that we could definitely use that as part of a mobile strategy. So we're having some internal discussions about what we're going to do with that code, what we need to do with that code, and how we're going to wire on a nice front end to it. The nice part about the way we design Daedalus is that it's based on a library called React Polymorph, which is something we built in-house. And we think that that code is quite portable to mobile experiences. And we've already done some work on that respect. So sooner than you think, probably later than now. As for Ledger, right now the ball's in their court to do a firmware update. Trezor's also expressed interest, and there seems to be an alternative team, Vacuum Labs, that's working on that. And we'll do what we can to try to accelerate that as much as possible. So it's going to come at or around or a little bit after Cardano 1.4, which is currently slated for October. So before the end of the year, most likely, but there are some factors that are out of our hand because we can only take it so far, and then we have to wait for the devices to update. We did change a few things. We have a new address format, which is much shorter than the old address format. We have sequential index HD wallets instead of random index HD wallets, which restore much faster, and a lot of other little things that you would like to have with a Ledger or Trezor device. And so it's important to get those in over what we currently have. So we'll make a dedicated announcement when we have more information about it. But for the time being, there's certainly a lot of interest on our end, on their end, and we're all kind of working towards that goal. It's just there's mountains of work to do all around, and I guess we're all kind of getting around to it. So anyway, let's see here. What stops Cardano from being number one right now? That's kind of a fun question. The reality is that for all cryptocurrencies, you need something called liquidity, utility, and community. These are kind of the three different parameters that you look at these types of things. So the liquidity is where can you buy it, what exchanges trade it, who's dealing with it, or how many market makers are there, is there institutional money or not. And what that does is it tends to drive lots of people into the space, get you media exposure, and build up the brand name, and really get that token out into the collective consciousness. Community is kind of what you do with all of that momentum and collective consciousness. Who's going to latch onto it, and what are they going to say about it? How are they going to propagate it, and so forth. And utility is what will, once they've collected it, once they have it, what can they do with it? So in the beginning, we were all just payment systems, and then after Ethereum, we were smart contract systems. And now there's all these next generation applications that people are thinking about as a consequence of the smart contract revolution. So to be a great cryptocurrency, you have to have all three. So we're working real hard to try to improve liquidity. We're working real hard to try to improve the community. And our hope is to get the Cardano Foundation to make some pretty sizable investments towards the end of the year and go all throughout next year to really market and bring up the community management side, do key leader engagement, key leader profiling, and get some dedicated community management for certain communities like China, South Korea, Japan, because we just seem to not have as much momentum as I would hope. And I really, really would like the foundation to invest more in there. And hopefully we'll get there. In terms of utility, the strategy has always been let's keep augmenting the code, updating the code, and adding new features and functionality. So smart contracts are definitely going to come. The Yellow testnet's out, the KEVM testnet's out. Plutus is evolving at a pretty rapid pace. And we're super excited about that. We have a dedicated smart contracts product manager. We've been testing beta chimeric assets, and we're really excited about this idea of when people can do ICOs on our platform and issue their own tokens on our platform. We've been talking to a lot of people about that, and we're quickly converging to a point where we're going to match or exceed the functionality of our competitors in market. That's kind of step one, because the functionality of our competitors in market isn't so good. User experience isn't so good. Speed isn't so good. There's a lot of problems there, and so a lot of improvements have to be made. So we have to go above and beyond that, and we have a lot of strategies, and we're just trying to roll things out as quickly as we can, and it's quite difficult. On our side, 160 people wake up every day who think a lot about priorities and what we need to do, who we need to talk to. We bring in a lot of contractors to do specific things just to accelerate things. Like, for example, we get asked a lot, like, when is the Linux wallet coming? And the reality is we could launch a Linux wallet today. The problem is that the way the file system for Linux works and the way that we store files right now for Cardano, it would be a very bad user experience due to the inode dependencies. So the only way to solve that is to get the 1.3 million files that we currently have and compress it down to about 40,000 or so. And we have a strategy for doing that for 1.4. So it takes time and it takes effort, and we're moving our assets to get there. But unfortunately, it's in this environment can seem slow to people on the outside. But things are getting better. 1.3 shipped. People really love the reduction in memory utilization. They really love the 3 to 5x performance improvement on the network side of things. And we just keep seeing the software improving and improving and improving, and we're just going to keep at it. And one day you're going to wake up, and it's just going to look like a totally different experience and product than it looked like when you started. And that's really the goal. So liquidity, utility, community, luck, that's really what you got to do. And we're going to keep pushing hard on it, and we'll get there. Okay. Yeah, so what do you think the Cardano ADA will have for real world use cases for everyday people? That's the $64,000 question that all cryptocurrencies suffer from. When are we there? It's kind of like when the internet first came out. It was a bunch of bearded nerds, and like me, they were probably not the skinniest people. And they kept saying that this whole internet thing is going to go change the world and make everything wonderful. And we all kept saying, well, when is that going to happen? And then they would point to their 2800 baud modem, and They're very slowly loading JPEGs and their static websites and say, well, see, it's there, and they have their command line interface browsers and so forth. And they say, well, one day. And then, we woke up and now we have Facebook and YouTube, and the internet is a vital component of our lives. So the key to getting cryptocurrency adoption is to find ways to take existing experiences and see where they can have value added to them through crypto. So either you try to solve problems that are endemic to the current structure of markets. For example, I'm deeply concerned about censorship with social media platforms, and that's less of a user experience, and it's more of a philosophical concern. And we're starting to see a definite trend where any speech that people don't like is just labeled a particular type of speech, and that gives them justification for silencing a particular person. And you always start with the most extreme elements because those most extreme elements are very easy to get rid of. It's kind of like when Obama made the decision to kill Anwar al-Awlaki, really bad guy. And so it was pretty easy for people to accept us killing him. But on the other hand, he was a US citizen, not charged with a crime in a non-combat setting, denied due process, who was effectively assassinated by the government. And philosophically, to say that one can do that is a pretty dangerous precedent. So similarly, censorship works that way. Cryptocurrencies are a key antidote to this because they can create a payment system, an incentive system for people to basically build a second internet to host content on. And that's something that's going to probably over the next 5-10 years become a big deal. And as the intellectual dark web starts to grow, we're definitely going to see a huge culture clash that occurs there between those who wish to silence and those who wish to speak, especially speak inconvenient things. Second, it's a great system for getting value to people who are having a real hard time transporting value around or getting value to them. For example, we think a lot about Africa. I'm just about to go to South Africa and spend some time at a conference there and hopefully meet up with the president. And while there, we talk about agritech a lot because that's a huge part of the African economy. In Ethiopia, 1.5 million people grow coffee. And a lot of those people have a heck of a time getting insurance, getting loans, getting access to financial products. And a lot of their interactions, their business interactions, are paper-based or oral. And as a consequence, they're not recorded. So it's really difficult to understand how do we implement sustainable farming practices. It's really difficult to understand what the supply chain looks like and so forth. So really where you see real-world adoption is when you can blend the old and the new, when you can take processes and change them just ever so slightly. For example, a lot of farmers in Ethiopia use cell phones and text messages for price discovery. They'll send text messages, find out what the washing stations are charging. So you can usually take that experience they're used to and just add a little bit more to it, and all of a sudden now you have a digital identity, and now you have a way of inputting data into a supply chain. Oh, and by the way, you can merge that with a system like Cardano, and then you can use Cardano as a system to get lending to them and to create new kinds of financial products instead of things like stumping, which is where you chop down the tree and you let it regrow and you get 200 to 300% more coffee production. And there's hundreds of examples like that you can tease out where you have an old process, and if you just apply something like a blockchain to it, then once you've identified everybody and you have a payment system installed, then you can just naturally all of a sudden interact with millions of new customers, and you can globalize them for the first time, which gives them access to better markets, more fair markets, and allows governments and private industry to make some decisions about how do they want to incentivize certain behavior, like sustainable farming practices or other things like that. So I think that's really where we're going. It's not dramatic where we're going to wake up and the dollar's gone and Bitcoin has replaced it. It's more of an iterative thing where people who already are going to get digitized and globalized and get online, this huge tsunami wave of billions of people over the next 10, 20 years, they're going to get online into an ecosystem where they have more capabilities, and those capabilities do not rely upon strongmen or middlemen of necessity. Rather, there's decentralized protocols that enable them to be able to get insurance and to get lending and so forth. So that's one of our goals as a company, IOHK, and Cardano is really envisioned to be that financial stack to get us there. And that's my hope. Now, we're not the only player. Stellar is certainly trying to make some inroads, and Ripple's trying to make inroads. And there are some people in the Ethereum community who really care about this a lot. Elizabeth Rosselló with BitPesa has been in Kenya for years now, and she's done some exceptional work. So it is really humbling to see how many people in our space really do care about this problem and are working hard on this problem. And we're real excited to collaborate with them where we can, or to learn from them in competition. So that's all I have to say about that. Any thoughts on the ETC Summit? Yeah, it's going to be a lot of fun. ETC has been, ironically, despite its very stressful beginnings, one of the most zen and relaxing projects I've ever seen in my life. It is just doing its own thing. There are a lot of independent dev teams. They're real passionate. They're real innovative. They're creating their own wallets like Emerald Wallet. They're proposing their own version of sidechains. Community came together, got its own monetary policy sorted. They needed money for funding of development and community management. So community came together, got some money for that. Community came together, got listed on Coinbase. And I don't really have to do a lot, and nobody's really in charge. It just kind of runs itself. And, that's how all cryptocurrency should be. That's a pretty amazing thing. We released Mantis. We've done already one major update to it. And in my opinion, it's the best Ethereum client on the market. And the summit, we're going to show off some new features we've been working on, like Ethereum support and ERC20 support and so forth, and some enhancements we've made to the wallet. And kind of discuss the end of year roadmap. And then we'll talk about some innovations we've made at IOHK Research. For example, we have this concept of NEPA-POWs, non-interactive proofs of proof of work, which are kind of like the ultimate solution for proof of work sidechains and the ultimate solution for really efficient proof of work wallets. As Ethereum Classic is a proof of work and will stay as a proof of work cryptocurrency, pretty exciting to be able to discuss that and show that off. So that's going to be pretty cool. And we're going to have a heck of a lot of fun going there and talking to people and just basically recapping the whole year. The other thing is I've become good friends with a lot of people in the Ethereum Classic ecosystem. And so it is really cool to share a beer with them and just hang out with them and have some fun with them, see what they're up to and what ideas they have. And they kind of teach me something. And that's always fun, too. Also, Ethereum Classic tends not to attract ICOs. So like the early days of Bitcoin, Ethereum Classic kind of feels like that, where it's a lot more discussion about philosophy, a lot more discussion about vision and where we can go, and much less discussion about what's the next big ICO, where's the next big investment, who's going to get rich, and so forth. So of all the experiences I've had, ETC definitely feels like 2011 Bitcoin all over again. And that, I think, bodes very well for the ecosystem, and it's damn resilient. Okay. Does IOHK have enough funding to take project completion? Yes, we do. We're very smart with our Bitcoin that we got. We divested it, and we're fully funded till 2020 for the Cardano project. Why does Cardano have slow development? Because good things take time, and I would argue the development's actually pretty fast, all things considered. Let's see what else we got going on here. BTC dumping. I rarely comment on the markets, but I really would like to say this. The markets. When I first joined Bitcoin, we were like $1, and then we went to $30, and then we went back down to $1, and then we went to $4, and then we went to $256, and then we went to $80, and then we went to $1,200, then we went down to $250, then we went to $20,000. And, if you look at any investment over a reasonable period of time, 3 years or 5 years, and you go from basically $200 to $6,000, that's the best investment of your life. You're like, whoa, I've succeeded. Wow, this is amazing. But unfortunately, people tend to have in crypto these insanely short time horizons. And they say, oh, wow, went from 20 to 6. That must mean everything's over. Party's gone. Crypto's dead. The dream's dead. All the passion's dead. All the entities are dead. All the fundamentals are gone. Governments are all going to turn on us. Class action lawsuits are going to drag everybody to the ground. It's like, yeah. And what happened to everybody when we went from $30 Bitcoin to $1 Bitcoin? That was pretty painful, too. So, the reality is the markets are markets. If I could predict them, I'd be a trader instead of an engineer. So I tend to stay out of them. But I do know that you have to be wise when you take a look at these things. Either you have fundamentals or you don't. If you don't believe there are fundamentals, you shouldn't be in crypto. If you do believe there are fundamentals, then you'll realize that this is an asset that's insanely difficult to price. It's subject to market manipulation. It's traded on thin markets, which in some cases are unregulated. and there's a huge influxes of capital. There's a lot of shady liquidity around, and that's what happens with these things when they're young. So if you're in it for the long haul, all those blips tend to normalize out, and you tend to see a long trend, and things are pretty good. If you're in it for the short term, you have to be pretty smart to know when they exit, or pretty lucky to know when they exit, which means you have a different set of skills. You're not looking at fundamentals. You're not looking at, where is this going and what is it going to do for society? You're looking at market structures and making bets. And when you gamble, sometimes you get jackpot, and sometimes you lose all your money. If you bet it all on black, it comes up red. So, I guess it just depends on your expectations. But I think it is kind of funny to watch the asset go from $250 to now 6,000 something, and for people to complain that the sky is falling and we're all doomed. The last point about that is that we have yet to see real institutional money come in. For that to happen, you have to have custodial risk addressed. You have to have insurance. You have to have ratings agencies. And you have to have regulation. That's all coming. There's huge investments going into that. Everything from Swisscom to Coinbase to others. Goldman Sachs is getting involved. And once that occurs, then people are probably going to rebalance their portfolios. And, BlackRock has trillions of dollars. It would be very trivial for them to throw a few $1 billion here and a few $1 billion there for some portfolio of cryptos that other people can store on their behalf. That's just a standard thing that Wall Street people do. There's too much money in the world, thanks to 2008. It's all floating around. They're looking for a home, and you can only buy so much gold and so much land. So when you create new asset classes, it gives somewhere for that money to go. So when that occurs, my belief is that it's going to have a huge positive effect on the marketplace whenever that occurs, but it's probably not 20 years from now. It's probably a few years from now or a few months from now. Who knows? It's hard to say. It depends on a lot of factors. But at IOHK and me, I'm in it for the long haul, and I'll be in this space a long, long time. So I'm overall very long, and I think people who panic about the markets have never traded before, have never invested before, and don't fully appreciate or understand that you have to be a fundamental investor as opposed to a technical guy, or else you're probably going to lose your shirt, because that's a mostly rigged game. Okay. Let's see what else we got here. Do you think the public blockchain space needs to converge to a handful of reliable, robust cryptocurrencies before one of them will ever have a chance of replacing a fiat currency? I don't think fiat currencies are going to be replaced. What I think is going to happen is that fiat currencies are going to become less relevant. Cell phones didn't kill the phone companies. They just changed the way phone companies did business. We lost the payphone, and a lot of landlines are going away, but there's still a business model there. And similarly, innovation won't kill the central bank. What will happen, though, is we're going to see competition for the first time ever, where basically you're going to have private money be put on the same footing as public money. Okay. And so what I mean by that is that you're going to have a universal wallet 5-10 years in the future, maybe 20. And that wallet's going to have your real estate in it, your airline miles in it, your silver in it, your gold in it. It's going to have all kinds of things in it. And when you go to Starbucks to buy your coffee, it's going to go ahead and let you pay in any one of those tokens. So you can have Bitcoin or ADA, whatever it might be. You click a button and boom, the merchant has been paid. And the merchant's going to be paid in whatever they want to be paid in. If they're going to settle in dollars, they're going to settle in dollars. If they're going to settle in euros, they're going to settle in euros. It's the merchant's decision of what they want to do. And that entire process is going to be open. That entire process is going to have decentralization involved in it, because there are going to be decentralized market makers that make that happen. And so you start thinking of wealth in terms of a universal wallet and in terms of a portfolio of wealth. Okay, so you no longer say, I'm worth $10 million. You instead take that $10 million of value, and then you're going to put it into some diversified portfolio, and that becomes your wealth. You might even have a different way of measuring it that's a bit more immune to inflation, especially if you live in a country that tends to suffer from pretty bad inflation. So that's where I think this is ultimately going to go, is in that direction. So I don't think the goal then for cryptocurrencies is to displace a fiat currency. It's rather to encapsulate a particular philosophy that some group of people tend to agree with and believe in. I used to be part of the Ron Paul movement years ago, and a lot of the people in the Ron Paul group love gold. They're big gold bugs. They collect it. they'd have gold coins. In fact, one of the favorite things they do is when you'd meet up with them and talk with them is they'd pull out some gold coin that they carry with them. They said, this is the only real money there is. That was their belief. And so to say to them, hey, if you believe that, then you can live in a 100% gold economy, store all your wealth in that, and you can conduct commerce as if you have dollars. They'd be in heaven. And I think that's basically where we're going. And there's really not a lot governments can do to stop that. And basically, it means then governments can lose the confidence and faith of their people in terms of their monetary policy. And instead of that resulting in collapse of the economy will continue to function. People of Venezuela can say, the Venezuelan government, they're just a bunch of dummies. We don't like them. So they're going to transfer all their wealth into different assets. And they're able to still function. The marketplaces are still able to function because the people haven't had wealth destruction as a result of the hyperinflation. I see tremendous value in that. And I think that's one of the points of cryptocurrencies as a fiat alternative, is to look at it in terms of the portfolio. As a fiat replacement, this is a very adversarial thing. And it's a dangerous thing because there's a lot of geopolitics involved in money. But it's not inconceivable. I mean, some countries do live with no control over their monetary policy. Greece went from their own money to the euro, and they could no longer print money to pay for all their retirement benefits and other things, and it forced austerity on them. So we could definitely see something like that come down the pipe as well, and maybe some governments would be okay with crypto, especially if they've lost the faith and confidence of their people. Okay, let's keep going. DAG protocols. So Arshdeep Singh, he says, in particular, curious about DAG protocols compared to Ouroboros. So a DAG is a mathematical structure. A linked list is a mathematical structure. And it's just a way of sorting reality. It's sorting things. And it's a way of managing the fact that in a decentralized system, certain people are going to have different views of that system based upon where they're geographically at, their network connections, and how people gossip information throughout that network. Now, if your goal is for everybody in the network to kind of have the same notion of time and order and have the same experience with events, there's a huge overhead to that, if it's even achievable. And so in some cases, what you can do is cleverly cheat a bit and say, well, if we have different types of mathematical structures in our system, and we have different types of assumptions about how the network works, maybe it's okay for Bob to have kind of a different view of reality than Alice, as long as we have some degree of confidence that when we put everything back together, Bob and Alice are kind of playing the same game. Now, the advantage there is when you relax these requirements, almost always you get some notion of performance improvement. So this is why people look at things like Phantom and Spectre and Ghost. What was going on there? Well, you have this notion in proof of work where you have something called the block interval. So you use the difficulty adjustment to be able to determine basically how hard it is to make a block. So what you can do is tinker with that so that you can make blocks faster. So you can, lower the interval from, let's say, on average every 10 minutes we're going to find a block to maybe 5 minutes or 2.5 like Litecoin has done. Or you can make it even shorter. The problem is the shorter you make it, the higher the probability that two people are going to discover a block relatively the same time. So each clique of the network is going to think Alice is right versus Bob is right. And so now you have a competition, and the first one to build a block on top of their chain is the one that wins. The other block becomes an orphan block and it gets thrown away, which means all the work, let's say Bob lost that, all the work Bob done is useless to the network. And you've slowed things down a little bit. So Satoshi very wisely set a longer block interval, 10 minutes, because it really lowers the chance of orphan blocks. It was a nice calculation. But you would want to have a shorter interval because you have more blocks in the same unit of time, which means you have more throughput for your system. So concepts like Ghost and Spectre and Phantom say, if we change the structure from a linked list to a DAG, then we can actually include these competing blocks, and there's some way of reconciling that double spending has not occurred. And now all of a sudden we've almost like doubled or quadrupled the performance of the system or so forth. So this is a good idea, and it's an idea that's been studied for a long time, and there's been a lot of papers written about it. Unfortunately, what's happened is some people who don't fully understand the theory have latched on to a particular protocol and used this buzzword, directed acyclic graph DAG, as if it is the end-all be-all of scalability, and then suddenly everybody gets 100,000 transactions per second or 500,000 transactions per second or some outrageous number, and they're infinitely scalable, as if they've just magically discovered something new and it's the biggest innovation ever and the Turing Prize is coming next year or something like that. And that couldn't be further from the truth. Whenever you introduce more complexity into your protocol, into your data structures, or into the way you manage consensus, you give something up. Either you give up some notion of safety, or you gain some notion, you get some issue where you're not entirely sure of history, or you increase the chance people can cheat, or you lower your resistance to people cheating. You're giving something up. Nothing is free in life. There is no free lunch. So DAGs are interesting. We actually are thinking about them with respect to Cardano. After Genesis is fully done, and we're almost done with Genesis, we're going to go ahead and work on Ouroboros Hydra. In fact, we've already made some progress there, and probably towards the end of the year, we'll publish our first paper. And that's where we introduce some of these structures into our model in a way that we feel would make them productive. So there's a lot of things to carefully think about. Anyway, my overall opinion is that where they're useful, but they're not the solution to scalability. If anything, they're just an additional tool in the tool bag that we have as protocol designers to try to get us to better protocols. But anybody who comes in markets saying that this is the way to go and that's going to solve all your problems, if you listen to them, you're probably going to go broke. Okay. Cisco, Charles Hoskinson, what are your thoughts on Bitcoin maximalists and their perspectives on the crypto space? You know, the interesting thing about Bitcoin maximalism is some people were Bitcoin maximalists, like Eric Voorhees kind of wasn't a Bitcoin maximalist. They kind of grew up, and now he runs Shapeshift, so that's like as opposite of Bitcoin maximalism as you can get. And a lot of that was a reconciliation of the reality that altcoins are not a threat to Bitcoin. They might take a little bit of the market cap, but altcoins actually tend to bring in people. So it's not a sum zero game where we only have one pie. And when you have an altcoin, you chop up the pie differently, and the altcoin gets some and Bitcoin gets less. When you create something like, let's say, let's go innovate the ad model, or let's go innovate social media, or let's do distributed computation, you're bringing in people who weren't in the Bitcoin space into the cryptocurrency space, and you're capturing them with an altcoin. Well, now that they're in an altcoin, they tend to like crypto, and if they have a good experience with it, they're probably going to buy Bitcoin too. So you're actually bringing net value in when you have these things. So a lot of the really mature maximalists, they kind of grew up and they said, we're all in this game together. We're all kind of doing the same thing, and innovations here can substantially benefit us here. Bringing in new people here can substantially benefit us there. And they got reasonable. Unfortunately, there are some people in the space that still think that Bitcoin is the only legitimate way of doing things, and they're very irrational. They say proof of stake is the only consensus algorithm, a pre-mine is a scam, an ICO is a scam. In all cases, regardless of what's done, anybody who participates in these things should go to jail, and the only source of truth is Bitcoin. And if you really deconstruct their logic, they're saying we're okay with a game where less than 10 actors are in total control of the network. We're okay with a game where some people who got insanely lucky to get in early, myself included, get insanely rich. And the only way those people can exercise that value is convincing everyday people to get in today. And we're okay with that. If you buy something at 10 cents or at $1 and it goes up to $20,000 in a 5-year time horizon, you basically won the lottery. It's a lottery ticket. Congratulations. You got lucky. You're not smart. You got lucky. You may have thought this is the future. Great. But you would have believed it's the future if it went to $10. You made a 10x. You say, wow, that's great. If you held on to it that entire time, maybe you were in jail or something, or maybe it was locked away and you couldn't touch it. But congratulations, if we're holding, you got very, very lucky. And unfortunately, these people, these Bitcoin maximalists, seem to think that that's not a reality, that doesn't exist, and that they have legitimacy, but everybody else doesn't have legitimacy. And they get very toxic, and they hold long podcasts where they kind of ramble about this for a while. And sometimes I even go on those podcasts and have lovely conversations with them, not to name names. So I think they're less relevant today than they were 5 years ago, and certainly less powerful today than they were 5 years ago. The success of Ethereum kind of was the end of Bitcoin maximalism in my approximation, because it proved you could have legitimate options that weren't clones of Bitcoin, that had totally new innovations and brought completely new ideas to the space. And so I think it's a movement that will persist. But there's people around who think that you can't get blood transfusions, and there's people around that wear magic underwear. There's plenty of strange beliefs in the world, and that's okay. You still love them, you still tolerate them, you still invite them to dinner. You still talk to them, and you still have fun with them. You just accept that maybe some ideas are pretty kooky. There's a particular person who's a big community leader in the Japanese Bitcoin community. He runs the Japanese Bitcoin meetup group in Tokyo, and he believes the Earth is flat. He's a flat earther. So yeah, I like the guy. He's fun to hang out with. We go drinking at the Pink Monkey or whatever it's called, or Pink Elephant. That's the name of it. And he's a cool guy. But obviously, I wouldn't take physics advice from him. So that is what it is. Anyway, so maximalism is here to stay, but it's going to become less and less relevant year by year, and it's no longer a barrier for innovation or progress in the space. Okay, let's see what we got here. Hello, South Korea. Yeah, that's a good question from Red Snapper. Who is my successor? One of the clever things that we did with Cardano is that we built a very federated ecosystem. We have Emergo, we have the foundation, we have IOHK, and even within IOHK, there's a lot of federation in the organization. I don't own the whole company. I have a co-founder, and we have equal power. We have a chief scientist. We have a director of engineering, Duncan Coots, and Agalos Kiasis, and others. And a lot of the major decisions are made in a discussion rather than a monarchy. There are certain things where I have to step in and say, this is what we need to do. I'm firm and confident, and I fight like hell to get it through. But more often than not, decisions are made by a more decentralized process. So while I may be somewhat of a figurehead in a certain respect, and there's some people really like me, if I was to disappear, Cardano would continue to be developed, and we'll get that contract done. And we're very confident that what we're delivering to market is going to be great. Just look at the authors of Ouroboros. We keep getting more of them, and they're very independent people who have had long academic careers long before they've met me, and they'll have long academic careers long after they're done working for me. So in a way, Federation is the successor, but my hope is the ultimate successor would be the community itself. We really have to start getting the Cardano improvement proposal process ratified. We're working hard on it, thinking about what we need to do. And as we enter 2019, that's going to become a huge priority. We have to get the wallet ecosystem more diversified, and Prometheus is a good step in that direction. But I'd love to see a JavaScript wallet. I'd love to see an Elixir wallet in full node. And, as that happens, you'll see a natural decentralization. One of the great advantages of working with the Ethereum Classic community is that they proved how to do that. They've done it at a pretty small scale, and yet it's almost as if it's Bitcoin. So there's a lot of lessons to learn there, and we're learning them, and we're going to try to apply them. So the long-term goal is definitely to decentralize and to certainly make me less relevant. I think if I kept traveling at this rate, I'll just keel over dead anyway. So the ecosystem's going to have to find a replacement for me. But that's okay. And everybody has to know when to leave. That was the greatest lesson I think Satoshi gave us. It was that you get the party started, you invite everybody, you get them talking with each other, and then you just kind of disappear. And my hope is that my tenure will be the same, that we can get all the major ideas out there, we can get all the major research done, we can really invite in some great ecosystems. We have a great relationship with the Haskell community, we have a great relationship in the academic circles, and we've gotten some of the brightest people in the world to really take Cardano seriously and consider Cardano to be a pretty cool project. And throughout 2019, we're going to really start engaging them and getting them to make open source contributions to the work we do. And then what will naturally materialize are strong differences of opinion. And then what we can do is to foster those differences of opinion, allow them to grow, allow them to persist, and find ways to compromise and work with and build up a really sustainable governance system. And at that point, Cardano is basically what Bitcoin wanted to be. And we know we got it right as long as we don't have a Cardano Classic or a Cardano Cash or something like that. And I hope that never comes. And if it does come, at least there's a pretty good reason for it. So yeah, in a sense, the company's all right. We have a lot of redundancies put in. The ecosystem is already federated. And a lot of the design decisions are being made in group as opposed to an individual. So we're pretty resilient and resistant to losing any one particular person. That's a good lesson I learned from my time in the space. It's the burn rate of the team developers working on Cardano, about $1 million a month. Let's see if we have anything else good here. Yeah, I love these types of questions. How is Cardano going to manage the distribution of ADA throughout the community to ensure ADA isn't owned by a group of wealthy individuals and to allow ADA to be used as the proper currency? So first off, how can I control that? There's this cognitive dissonance that some people have, and this is a closely related question, I think, to the burning of ADA question, as if there's this large chunk of ADA that's sitting in a vault somewhere that nobody controls. It's just unallocated. And people hold these surveys and they say, oh, when can we burn that? Or let's fairly distribute that so we're all egalitarian or something like that. Guys, 100% of ADA in circulation is connected to legal owners, human beings with pulses. Okay, some of it the IOHK controls, some of it the Cardano Foundation owns, some of it Emergo owns, and the rest of it is completely owned by the community, of which I have no idea who owns it. It's all over the damn place. We know what the initial distribution looked like, and it was pretty egalitarian, reasonable Gini coefficient. I think the average purchase size of $5,000-$6,000. There was some large scale purchasers, but for the most part, ADA, it's distributed. People are all around buying it, and what happens is the large whales, they sell because they've made large amounts of profit. If they got in early and it went way up, they divest because that's what you do when you're rich and smart. And when you divest, you sell it off in chunks. You don't sell it all off at once. And when you sell off in chunks, it goes from one large owner to smaller owners. So you have a natural divestment. You have a natural diversity that forms with these assets. Look at Microsoft. At one time, Bill Gates owned 64% of the company. Now he owns less than 5% of the company. And it's a very distributed company owned by millions of people all throughout the world. Similarly, when you look at the distribution of cryptocurrency over time, it tends to gradually winnow out and become more distributed. But it's not my job to wake up and say, how do we have equality? You can't achieve equality. There are rich people. They exist. The key is to say, despite the fact that rich people exist, can everybody use the system? You have a bad system when a small group of people can inflict their will on the system and force the system to operate in a very bad way. And that's what we have in the existing financial system in the United States and throughout most of the world. A small group of people have a huge amount of control over how banks work, how regulation works, how your credit cards work, how lending works, how Wall Street works. And they rig the system so that no matter how the macroeconomics are, whether we're in a boom cycle or a bust cycle, they make money. And the rest of us don't do so well. We don't get raises. I think the middle class hasn't really gotten a substantive raise in 30 years. It's harder and harder to buy healthcare. Things get more and more expensive year by year because of inflation. And so the rich are getting richer and the poor are staying at where they're at, or they're getting poorer. And that's a bad system. Okay. So the key is you shouldn't be asking, what is the distribution of money? You should be asking, does this system permit a small group of people to co-opt it and convert it into something that they control exclusively? And if you look at Bitcoin, that's the case. Less than 10 actors are in control of the entire network in terms of its hash power. So the entire security guarantee, the exogenous consensus, is controlled by a small group of people. That's a bad outcome. We talked to both the Bitcoin Cash core developers and the Bitcoin core developers because we've been building sidechains. The Bitcoin core developers ignore our people. Dionysus, the architect of our sidechain solution, is mostly ignored by Bitcoin core. We have no ability to influence or participate or to communicate with them. We have to be really sneaky. Like when we funded Dandelion, we had to hide the fact that IOHK was involved so they could sneak Dandelion in through the back door. But for the most part, they're unapproachable. To give some credit to the Bitcoin Cash guys, at least we could have a conversation with them. But that's centralized development. It's an exclusive club. I'm not in it. We can't be in it. We have some of the best scientists and engineers in the world. Built the first formal spec for UTXO wallet. Bitcoin could use that. It's a great idea. We've implemented in Haskell. It's formally verified in Coq, but yet it's not even discussed. So it's less about distribution of funds, and it's much more about control. And if you built the system the right way, you can afford the billionaire. There are plenty of economies in the world that have billionaires in them. But despite that, they don't have many homeless, and people are doing pretty well. And anybody who wants a good education can get it. Anybody who wants a good job can get it. So you're doing something right if you allow people to innovate and enjoy the fruits of their labors and the meritocracy of their work, but that doesn't come at the expense of everybody else. You're doing the job wrong if you allow some small group of pre-assigned people to rig the system so that the people at the top always win as opposed to everybody else. So that's my focus. As for burning ADA, as for trying to redistribute ADA, I don't have the legal means to do so, and that would be theft. So cut it out. Stop asking. It's not going to happen. You can launch Commissar coin or something if you want quality of outcome. Let's see what else we got. Staking. So good news on staking. We're doing some real good work, and we're putting things together for that. So we just published a paper for, we submitted it to Wine 2018, and that's not a conference on wine. It's actually called Web and Internet Economics. It's held at Oxford, December 15th to 17th. I hope the paper gets in. But basically, the papers are a paper on incentives. It's some groundbreaking research where we thought really carefully about proof and stake incentives and stake pools, and what are the economics of these things, and what is the game theory behind it. And that paper, I believe, is on our website already. If you go to our paper library, I can also tweet a link to it for people who are interested. Looks like we're probably going to have about 1,000 stake pools. That's our current best estimate to how many stake pools we'd like the system to have. But if you're building caps, you never put hard caps in. So that's a kind of a relative maxima, because basically you start making less money if you have more than 1,000. And the incentives paper actually provides mathematical formulas that show how we can kind of use some dampening effects to try to get the system to converge to that kind of a size. So much larger than you'd see with normal stake pool style systems, and it's very egalitarian representative, and we're going to make staking pretty easy. So that's Shelley. We'll be releasing information very quickly on that as it comes. Sometime this month, we're going to have all the 21 work units of Shelley completely spec'd up and all the time estimates done and so forth. And we're right now shaking up our squads. And once 1.4 is out the door, it's going to become our primary focus. And we're going to try to get through all of those work units as quickly as we can. The Shelley testnets will also come out, and you give a lot of people who registered for the stake pools an opportunity to come and play around and see how staking works and so forth. And we'll work really closely with the community to try to build up a lot of knowledge and competency. And then come Shelley, there'll be some sort of mechanism where epoch by epoch, the network gradually turns over, and eventually 100% of the network will be controlled by a completely decentralized and huge group of people. So good news is also as technology improves and the protocol improves, we'll probably go beyond those 1,000 stake pools to tens of thousands. And we'll also be able to try to tether stake pools with layer 2 services and with network relay. So in addition to just doing consensus, they will also launch relay nodes, and they'll also do things like host our version of Lightning and Oracle services and so forth. So you'll end up getting thousands and thousands and thousands of service providers providing overlay protocols that will dramatically accelerate user experience and provide data feeds and other things like that you require for smart contracts, in addition to potentially getting more distributed computation with the system as opposed to replicated computation. So it took us quite a bit of time to get here, but we did things right. This paper we published in Wine, we sent to Wine, is really the first of its kind. No one's really written a paper in academia about this topic before. The delegation scheme that we've come up with is really sophisticated, and there's a lot of careful thought, like how do you do cold staking and how do we deal with exchanges in the mix? Because when you send your ADA to an exchange, technically they would have control over that and be able to use stickers. So we had to create a special address for them to use that would prevent them from participating in consensus. There's just a lot of that little stuff there that when you try to pull these things into a practical system and you go from the science to the practicality, do take quite a bit of time to work your way through. So we spent that time. It took a lot longer than I thought it would, but I'm glad we did, because we learned a huge amount along the way, and we know these problems down at a level that we can share these problems with the rest of the community, the academic world, the game theorists of the world, and other such people. And so as a consequence, we're in a really, really good position as an organization to be able to introduce these problems into the 2019 and get hundreds, if not thousands, of people working on them. And we'll move from classical consensus style problems to more a merger of mechanism design and consensus. And we'll be talking about the crypto economics. And we'll be doing it as a very large community with business professionals, with lawyers, with economists and computer scientists, as opposed to doing it as computer scientists, where we only kind of see a narrow part of the world. So my personal best estimate, but we need to get more data, be Q1 of 2019 is when we get all that work done. But my hope is to find ways we can shape some things off, jettison some cargo, so we can get this out the door faster. Closely related, but somewhat orthogonal, is the idea of smart contracts. And that's a situation where that's actually working faster than the decentralization. We already have the yellow testnet out, and there's probably maybe only 2-3 months worth of tuning and parameterization that we'd like to do and cleaning we'd like to do before we'd feel comfortable with a 1.0 smart contract stack, assuming semantics-based compilation and K's rewrite and K to yellow VM is done and so forth. That's runtime verification's wheelhouse, and they have a 19-person team working on that. So then it's just a question of how do we want to link these systems together, and where's sidechains at? So we actually have like 5 sidechains papers, and we're slowly rolling those papers out, and we're submitting them to lots of conferences. So all throughout this year, you'll see more and more sidechains papers coming out. Some papers are papers building cryptographic primitives like the NEPA POW, and other papers are kind of stitching that primitive together into a practical system, and other papers are kind of discussing the theory behind it and so forth. So look for those as well. And as soon as we can find a responsible way to pull that into the stack, either pre-Shelley, Shelley, or post-Shelley, we'll find a kind of a route. That's when we'll be able to link up a CL and actually run smart contracts in the system. The other thing that we're really having a lot of discussions on is how robust do we want the scripting language of SL to be? We have this notion of taking the UTXO model and extending the UTXO model so we can support Plutus-style smart contracts. The most conservative way of introducing that would be to introduce an additional control layer with the Plutus-style smart contracts built in. The most aggressive way of introducing that would be simply to extend SL and introduce this. So we're really thinking deeply about the security consequences, the performance consequences, and kind of the utility side of allowing smart contracts in some form, in a functional form at the base layer with Marlowe and Plutus and the extended UTXO model, or if it really ought to be outsourced to a different ledger that's meant specifically for safe contracts. So that's some tension, and we're having a lot of discussions about it, and we're trying to understand this. And this is really the first time, though, that programming language experts have looked at the smart contract model. It's mostly been done by engineers, and now we have people who have spent their lives designing programming languages and thinking about the consequences of these languages, applying really heavyweight theory to this issue, like Manuel Chavardi, Michael Peyton Jones. We are working with John Hughes on the testing side, Phil Wadler, and others are on that team. And they're just great people, and we're real excited to be working with them. And we think that they're going to bring a heck of a lot of innovation to the space, which is very different than the innovation that was brought with the Ethereum model. Yella is more a logical refinement of everything that Ethereum was about, and just trying to take an old thing and make it better and also make it correct. Whereas Plutus is a completely new thing, and there's a lot of potential execution risk there. So how we can stage all these things and pull them together, we're having huge discussions about that. But the good news is we got a big team. A lot of the remedial work, like the core refactoring and network improvements and 1.4 stuff, is coming to a close. And then that team can be repurposed towards getting these things out the door as quickly as we can. As with all software, I wish we had another 6 months. As with all software, I wish we were, further along. But that's just the nature of the game. the good news is we're not going anywhere, and we're pretty damn persistent. So we're going to keep working on it. We're going to keep pushing hard, and we're going to just keep going till it gets done. And we also know exactly what we want to do, and we have a very clear vision. And we have some extremely talented people who are applying very heavyweight theory and very heavyweight techniques towards what we want to do. And that's a first for the cryptocurrency space. And we're trying to do things the right way, but do them in a timely way. And that's a huge balancing act for us. Well, that's actually a really good question. Hi, hello, Charles. Would it be possible for IOHK to organize workshops, tutorials to teach the community to read and write formal specifications to increase the safety of the ecosystem? Yeah, so one of the visions Grigori Roshu has with K is to teach people enough about K and the specs of K so that you can actually start thinking about smart contracts through the K lens. So he's already demonstrated this once before where people came up to him, they said, hey, we have these ERC20 tokens. Can you let us know if we implemented it correctly or not? And he said, oh, sure. So they actually wrote a formal specification for ERC20, and now they offer a service at RV where you can go with your ERC20 and pay them some money, and they can look at it and say, this is the good, the bad, and the ugly. So it would be really, really cool to talk about libraries of contracts where you don't necessarily look at code, but you rather look at the specifications and your options, and then teach people ways of verifying that they've actually correctly implemented from specification. Smart contracts, in a way, are perfect for this because they have well-defined business logic. They generally are very small, so under 1,000 lines of code, and they tend to exist in well-understood kind of toy environments, bespoke built for them. So when you have those things together, you have a very good target for verification and to know what's been done is correct. So we've had a lot of discussions with RV about, well, when and how would it make sense to try to open up some of the magic that they have under the hood and start formalizing lots of concepts and things like that. Some cases teaching people how to write the semantics of their programming language so that we can support that programming language with SPC, or for people to write formal specs of things like non-fungible tokens or a security token specification or an asset or something like that. So that's one lens. Then another lens is the bespoke verification for one-offs, where, let's say you have a DAO contract and you want to know that that is correct. So it's an open question of what does the tooling need to look like and what types of tests can you use, whether it be property-based testing or fuzzing or these types of things, and how do you pull these things together to make that work well? And that's a conversation we're having with Cuvic. That's a conversation we're having internally and within the Plutus team as well. And I hope that as the Plutus model evolves in tandem, there's going to be a huge discussion about the developer experience and the notion of verification. So we've already started some preliminary discussions, like we talked to Ranjit and Nikki Vazoo about Liquid Haskell and this idea of introducing refinement types into our own development process. And it'd be so cool to have like Liquid Plutus or something like that, where we can introduce that notion into our stack. But it is a pretty complicated topic. The problem with formal methods is that it's something that as a computer scientist, you probably don't encounter. If you're training, it's like the nuclear medicine or the neurosurgery of medicine, where most doctors aren't that type of doctor. They know of it and they know how to refer you to that person, but they don't know much about it, or they don't really think about it too much. They just know what they do. And it's the same situation. Formal methods is very bespoke. And there's some people like Benjamin Pierce and Xavier Leroy and others who have done exceptional things and really cool things. And there's some interdisciplinary work, like, for example, Blavatsky's work on homotopy type theory, which is just elegant as heck and really cool and amazing. But at the end of the day, the tools are still quite primitive. They're not user-friendly. They're not built for engineers. They're rather built for academics. And the pedagogy behind these things is exceedingly difficult. Most of the textbooks are written assuming you have graduate level computer science training and graduate level mathematical understanding. They're written in very complicated prose. The examples usually don't have, the example problems don't usually have solutions, and it's not really done in a way that's developer friendly. So we have had some conversations with our director of education, Lars Brunjes, about what would it take for us to kind of get into a more practical sense and not necessarily have tools as heavy as Coq or Isabel, but lighter weight tools that could provide verification of smart contracts. So, we sent our education guys over to the Oregon Programming Summer School back in 2017, and they got to talk to Edwin Brady and a lot of other guys. Edwin created Idris, which is probably the most accessible of all of these dependently typed language systems. And we did learn a lot. And we actually have a formal methods group within IOHK, and some of the people there are actually new to formal methods, and we purposely picked good people who were great engineers but didn't know about these things so that we could kind of get experience in teaching them to people. And so as we come along, that's definitely going to be a priority of our company. And this is also important to point out, should be blockchain agnostic. It's a really bad world if everything you do, vendor locks you into a particular blockchain solution, like Ethereum or EOS or Cardano. Really, you should start with, who are my customers? What is the business domain that they exist within? What do they actually want to accomplish? And be able to write that out in some sort of business process language, and understand what you're actually doing, the substance of the relationship. And that, in a way, becomes your specification, and you should be able to make that machine understandable. Then, when you implement it, you should be able to A/B test and prove by simulation, or prove that these things are in some way connected to each other, so that you know that the semantic gap between what you thought you wanted to do and what you actually did was closed. That should not be platform dependent. We should not say, well, this tooling we've constructed, it's only going to work on Cardano. Because what happens if you as an engineer have a business requirement to use a different platform? Or what if you just decide that you like another platform more? For example, if our privacy side is not good enough for you, you want to go to Monero or something else, and they now support smart contracts, well, you couldn't migrate over. And that would be a really bad world to live in. So it's not just, can we teach people this? The answer is yes. It's a question of, well, what does this mean? How do you make this platform independent? And also, how do we make the tools lighter weight and more developer and user friendly over an arc of time? The good news is that this is not a game we're in alone. There's a lot of people now thinking about this, like the Zen Protocol guys, the Archain guys. There's dozens of them running around. Even some people in the Ethereum space are starting to take this real seriously. So we're seeing a lot of desire to move in that direction. And probably will end up happening is we'll have intercompany, inter-blockchain standards that emerge and committees that emerge. And basically we'll just develop some best practices together. And then once we have those, then we can create curriculums on those, put them up on YouTube, put them up on Coursera, put them up on Udemy, put them up on edX. And then a lot of people can self-assess and self-train and self-learn and so forth. There might even be ways to actually incentivize people to verify things are correct. And that would be a really cool token for people to come up with. Yeah, this is fun. People talk about Mt. Gox owning mass supply. Charles Hoskinson owns 40% of ADA shares. You notice they never present you any proof. We did a public disclosure of how much IOHK has. I don't currently have any. The company does. I think it's around 8%. And he's hiding between 15 countries. I'm hiding. I'm right now in my home in Colorado, but I guess I'm hiding, right? I go to Japan, I go to Colorado, but I'm hiding. And where did $30 billion go in 4 weeks? Well, that's also a factually wrong statement, but who cares? Trolls never make good statements, right? Brings up a broader point. ADA went from 2 cents to $1.20 down to 11 cents. It happens. It's painful. It's exceedingly painful, especially if you're the guy at the top, because you have to ride the roller coaster down. Some people have done that. Some people bought Bitcoin at 1,200 and had to watch it go all the way down to 250. It was really hard. Some people bought at 30, watched it go down to 1. And that's what I was saying a lot earlier on about the nature of fundamental investments versus technical investments, and this idea that everybody's just going to get rich for doing no work whatsoever. People, if they don't understand what they're doing, can lose money in any venture and in anything. And it is really unfortunate when some people have extremely unrealistic expectations. And then when it doesn't work out for them, they don't want to blame themselves. They don't want to blame their poor decisions. They just blame whoever happens to be at the top. And they say things that are lies, outright lies. They make personal attacks and do whatever they want to do. And that's just the nature of how the space works. It's the nature of all of these things. Some days you're a hero, some days you're a demon. Just depends on how the markets are performing. But I would hope, though, that people recognize that an utter lack of civility and no way will make your money come back. The only thing that will happen is if we can get better macroeconomic trends. The markets are depressed relative to their all-time high. We as a community are pretty backed up and bashed up, and there was just too much speculation and hype. I was saying this before the markets went up. I was saying this at $500 Bitcoin. I went on Bloomberg and said it, and I warned people that we're probably going to have a collapse. Then we went up to $5,000. I said the exact same thing. I believe it was on CNBC Australia. I said the exact same thing to CoinDesk, to Cointelegraph, to anybody who'd listened, that, guys, we're in a speculative bubble. The bubble's probably going to burst. Well, some people didn't listen. They got hurt. But it's my fault, apparently. And that is what it is. And, that's just how these things work. But one thing I'd ask everybody to do is use some common sense. Look for facts when people make statements or assertions. What evidence do they have? And you'll find out that a lot of the people who say these things they have no facts. And that's because there's actually an industry now to lie. Fake news is real. Trolling is real. And it's not some people having fun at a keyboard at our expense. It is an industry meant to damage competitors. You can pay money on the dark web, or in some cases, legitimate companies in Eastern Europe and other places, to have armies of people go and lie about your competition. You do this to short sell. You do this to benefit your own position. You do this to distract people. It happens to Tesla. It happens to Apple. It happens to political campaigns. Really was a big deal in 2016. And that's just the world we live in. Because at the end of the day, what is the cost of doing this type of attack? A lot of it can be automated. A lot of it is just mainstream propaganda. And you only need a small team of people. And using automation, you can broadcast it to thousands of different channels. And it can really impact the credibility of projects and really distract people. So we have to be good critical thinkers, because at the end of the day, no one's going to be a critical thinker for us. You have to look at the history, the track record, the progress that's been made, the statements been made in historical context. You have to look at the commitment to transparency. You have to look at who are the people behind it and what have those people done throughout their lives. And when you string those things together, then very quickly you can start separating fact from fiction. The problem is that takes time. That takes effort. That's a commitment. And a lot of people don't have time. They don't have effort. It's too much of a commitment. So they just have a mob mentality and follow whatever it is there, or just believe whatever the hell they read. And that's why we've gotten into some bad positions in life. So for my own part, it's become so toxic that I've decided, for example, to leave Twitter. I'm just using it as a broadcast platform. I actually write up the tweet, I post it, and I don't read comments anymore. I really enjoyed Twitter when I was on Twitter, especially when it was smaller, because I had a lot of Twitter friends. We would DM, we'd say great things over Twitter. Sometimes I'd send something to Mark Andreessen, or send something back. Sometimes I'd send something to Charlie Lee. It was really enjoyable. But when a Twitter mob materializes around some statement, maybe I could have been nicer in it or more humble in something, but okay. A Twitter mob materializes around articles are written about it. It's no longer valuable to our company, and it's become a distraction, and it's become a liability. So what we have to do is just pivot, use it as a broadcast medium, and completely ignore the feedback coming back. That's the consequence of the reality we live in. Going back to one of my opening statements in this AMA, there was the idea of deplatforming, and that is another problem with this fake news. Is it's a soft deplatforming. If you're really good at playing the troll or the propaganda game and the fake news game, what you can do is take somebody you don't like and then wrap them in an aura of illegitimacy, making it seem as if lots of people are outraged over what this particular person is saying. A great example of that would be how Jordan Peterson has been treated. If normal everyday people listen to Jordan Peterson, there's kind of two camps. One group of people says, this guy rambles and I can't really understand what he's saying, but it's really academic and it doesn't seem to be very harmful. So whatever, go to the Dragon and Slay or Lobsters or whatever. And another group of people, they really connect with him and they say, yeah, Jordan Peterson kind of makes some sense. Okay, I'm going to buy his book. He's bestseller on Amazon. But there's some very radical, extremely small fringe group of people who have mastered social media And they have managed to convince certain members of the media, certain members of society, county councils in certain places, that this guy is a bigot, a sexist, a homophobe, hates transsexuals. He's a horrible human being, a monster. And if you put him in power, he'd strip women's rights away and regress us back to 1900. They're just convinced of this. And then you ask basic questions such as, which statements are you worried about? And they never really give you that. They just show up at the rallies with megaphones, beating drums and air horns and trying to shout him out or deplatform him and so forth. So these attacks are also used as a soft way of deplatforming messages that are inconvenient to particular agendas, whether they be economic agendas or they be political agendas or they be social agendas or so forth. And they massively reduce the signal to the noise ratio, and they basically make people turn off. So I think the cryptocurrency space is not immune to this. We see it all over. People are fanboys, certainly. The debate between ourselves and Vitalik is a great example of that. Reddit is definitely not the place to have an academic debate. As I mentioned before, we were at the Shanghai Winter School. We were at Financial Crypto. Didn't really have time to talk to us there. Perfect venue to have an academic debate. There's chalkboards on the walls. We would have been happy to discuss anything he didn't understand or had questions about or concerns. Instead, he chose to use Reddit and Twitter, the least effective mediums and the ones most prone to manipulation by fanboys. Is that transparency? Well, if your aim is to actually have a conversation and a productive debate and understand what each other are doing, it's not. So that's what I'll say about these things. Okay. Concerns about Cardano. I do have concerns every day. I wake up and ask myself, was Haskell the right choice? Did we have the right ambition to execution? I wake up and say, was proof of stake the right choice? There's certainly a lot of innovation that could have been done with proof of work. The challenge with Cardano was that we went for gold. We went for everything. We said we want the best programmers, the best programming language. We want the best technology, the best consensus protocol, the best governance, the best this, the best that, the best this. We were insanely ambitious. And we brought together really the all-star team because we were so grand in our appetite, so grand in our ambition, that we were really able to attract people who didn't care too much about the cryptocurrency space, like, for example, Phil Wadler, and say, hey, who cares about crypto? There's just some really interesting stuff you can do here. And when we brought these guys in and we worked with these guys, we really got some magical stuff. But the problem is that magical stuff wasn't quite as fast as we would hope. And we worked really, really, really hard at trying to get, things to move a little faster. And that meant that some cases we had to reduce the appetite a bit, reduce the principles a bit, and be a little bit more pragmatic. Like, for example, with Prometheus in the Rust library. And that's okay. That's the reality of these projects. So, as a CEO, you're always haunted by the poor choices you made, the mistakes you made, these types of things. And and you just have to keep moving forward, and you have to pivot, and you have to know when you need to be a bit faster, and you have to know when your principles are working. The good news is the hard stuff is done, and we've gotten over the hill, and we have some great people, and we've made some great progress. The bad news is that we're not already completely out with everything and not the market leader yet, and we probably could have been had we just been less ambitious. But in the long run, all we really would have been is the tallest small tree in the forest, and we want to be a sequoia. And we planted some really deep roots, and we planted some really deep seeds. And I'm really thankful that we have a community that, for the most part, that's willing to wait with us to have that sequoia grow and become the biggest tree, not just in the forest, but in the entire world. So I'm confident in the direction now, and more so than we've ever been. I'm haunted by the delays and the bad processes, and kind of wish we got a do-over on certain design decisions that we made in the past that we're now fixing today. Whenever you have to rip out code you spent a lot of time and money writing, and you have to put new code in, you always feel bad about it. But overall, I feel pretty good. And I think Cardano's in pretty good footing. The system of peer review used. This is another thing that seems to be manipulated by our competitors or in the space or trivialized. But everyday academics understand. You have these conferences. They're the IACR conferences, and they publish books like this. So this is for financial crypto in 2017. So here you go. It's a nice little book. And basically, if you look through it, this is a assembly of all of the papers that have been submitted to that conference. So here's an example of one right here. Okay. And, basically the process is always the same. There is a date announced where papers will be called for. You submit your paper and it goes to a review committee. The review committee is made up of domain experts that are associated with the conference. Depending upon the field, it can either be very large or very small, especially big fields like artificial intelligence. There's lots of people. Other fields like cryptography, it's a bit more intimate. And your paper goes through several rounds. And what happens is people have a spectrum. They can strongly accept it for really exceptional papers. They can accept it, weak accept, weak reject, reject, strongly reject. Now, for tier 1 conferences, about 90% of the time, even after you go through this whole process, your paper is rejected. Maybe 80%, depends on the conference and the year and the committee and how aggressive they are for a particular topic. But almost always, you have to go through a rebuttal phase where, they say some things and they say, well, we might accept it, but we need to understand more about this and this. And you have to write a really firm rebuttal. And if you don't survive that, paper doesn't get accepted. This is a time-honored process. It's existed for decades, and it's allowed us to build modern cryptography. So all of the security you take for granted with e-commerce, all the cryptographic primitives that we use in crypto and Bitcoin and in the cryptocurrency space, in some way we're connected to this process. It's a very efficient process, too. It's not slow. In some fields like mathematics, I personally was pretty lamented about how slow the journals could be and publications could be and how long the peer review process takes. But reality is when you have a pivotal paper, almost every 3 months, there's a conference window that you can submit that to, and so if you miss one, you always have, just next quarter, you'll get it in. So does it work in a matter of weeks? No. But it does give you certainly an opportunity to get your work seen multiple times per year. That's unique for the field of computer science. It's very fast relative to other fields of science. If it gets accepted to a conference, it's just as good as if you got accepted to a peer-reviewed journal. So that's another difference between the computer science world and, let's say, mathematics or physics or other academic disciplines, where conferences tend to be lower on the academic food chain than the journals. It's the opposite with computer science. If you get tenure, you've gotten tenure because you've gone to a conference, not because you've published in some journal, more often than not. So anyway, we utilize this process as a great checks and balances. We hire the best scientists, we collaborate with the best minds, but at the end of the day, these are very dense papers, and they make some big, bold claims, and they're really hard to read. And even if you're really smart and you have great processes, mistakes slip through. Peer review is a great way of having an independent team of people who have no financial incentive, one way or other, to take a look at your work and make a judgment call whether this is unique and novel and something that's added to the science of the space. And by definition, if you're trying to do innovative things that are going to change the world, you have to innovate the science to get there, because the existing science we have isn't good enough. So it's a check and balance system, because it's a way of verifying that what the scientists we have think is true is probably true. It's not the only one. You still need to write specifications from it, because there's lots of hand waving in papers where they say ideal functionality and assume you can instantaneously transmit a blockchain and all of these types of things. And basically, that's not real. You have to actually be engineers and build these things. In the process of building it, there's a feedback loop that happens, and the engineers are hard asses with the scientists, because it's not optional. Even if you can hand wave and say, you know what I mean, maybe that works in an academic conference, but to an engineer, a computer can't understand it unless it's specified and it's encapsulated in code. So in a way, this is a beautiful pipeline where you get thoroughly creative, really smart, really great people together. You have them write innovative papers that solve real problems. You go to conferences, which are quite frequent. you talk to some of the best and brightest people in the world whom you couldn't even hire if you wanted to because they don't want jobs. They already have great faculty positions. You get them to extend themselves into your product for free, charge you for this. And then they give you great feedback, which then puts you in a really good position to start a conversation with our engineers about that science. And then they write a specification, and that specification cannot have ambiguity. So in the process of writing specification, anything that was cheated, anything that wasn't certain about the design of the protocol gets teased out, and then revisions have to be made, and we have to think carefully and make sure everything's right. That 1, 2, 3 pipeline is really nice. It's independent of a particular person. There's no cult of personality involved in it. There's checks and balances. It's double blind, especially on the peer review side. And on the protocol side, you have a computer involved in it. And it has to run, and you can benchmark it and test it, and you have some expectations of what it should do, and now you're testing it, and if there's a delta between those two, there's something wrong there that would indicate that perhaps the protocol's not right. That's the process we follow. It's not like we invented this process. It's existed for a long time, and it's produced a lot of good things, and big companies use it, like Microsoft and Google, when they're doing things that are based on science. The advantage we have is because the peer review cycle is so short with the computer science world, it doesn't interfere with shipping of products. Casper has been researched longer than Ouroboros. And despite that, we actually are ahead of them. We have more Byzantine resistance. We're getting very close to having a production system based on it. And we solved all the high-level problems like delegation and stake pools and incentives. And when we flip the switch, the system's running. We're probably going to beat Ethereum to the market for proof of stake. They had a whole year on us, and they're not following a peer review process. Why it accelerates you is that, you spend a bit more on the front end. When you get to the engineering side, you have a purer product that gets to the engineers. And as a consequence, they can think faster, they understand more about it, and there's less hand waving there. So you can get to the real protocol much faster. Second, what the science and the engineering look like is much closer. When you design things in a very heuristic way, the paper looks very different than when you end up implementing. In some cases, they don't match at all because you have to make compromises and the engineer just makes decisions. So you might have some wonky way of making random numbers here. You might do something completely different there because the reality is the wonky way just can't work. Maybe it has quadratic complexity or some weird thing like that. So that's our process. We've been very open about our process. Anybody's free to participate. Like, we're going to crypto in Santa Barbara here in a little bit. If you guys want to go visit and see our scientists talking to people at crypto, that's great. We're going to CCS. You're going to Eurocrypt. These are some of those conferences we go to. We go to Financial Crypto. That's usually in the Caribbean. It's a nice conference, fun conference to go to, and we see a lot of people there and a lot of good friends there. The other thing I'd like to point out is we have competitors in the academic world. There's Algorand, there's Thunderella, there's Avalanche. There's all these great competitors who are by great people who are incredibly smart. And they have great engineers behind them, and they have universities behind them, and they have ideas too. And you know what? Our ideas aren't so good that they're automatically better than their ideas. The reality is that it's a wash. In some cases, they have something better than we have. When you go through this process, you learn something from this process. It's not just about verifying what you've done is correct. It's also about asking, well, is there anything better than what I got? And instead of saying, well, I just didn't know, now you're talking to 25 people who are all in that same domain, all thinking about the same problem, who are probably just as smart, if not smarter than you. So that humility pays back, gives you more back. This is really, really fun. And it's something that I think is undervalued. There's only so much you can learn from putting something on GitHub, from putting something on YouTube and having conversations with engineers. If you're going to do science, you talk to scientists. You're going to do medicine, you talk to doctors. If you're going to do engineering, you talk to engineers. But these are different things. And so you have to use the right tools, the right processes, and engage with the right communities to be able to get yourself where you need to go. I was on a panel at CTRSA where Adi Shamir, Matt Green, and Sylvia Macaulay was on the panel with me. It was an amazingly humbling experience. I am not a computer scientist, but I'm on a panel with 2 Turing Award winners. That's the Nobel Prize of Computer Science. And we had a lovely discussion of proof of stake. Adi's very skeptical of it. Silvio's building his own proof of stake protocol called Algorand, and I'm there to represent Ouroboros, and Matt Green and actually Bart Purnell was there as well. Wonderful guys. Matt's creator of Zcash. And we get to talk about these things and say, well, Addy, what are your concerns? And in the audience, Ron Rivas was there. The S and R of RSA are there. There is no amount of money in the world that can get all these guys in the same room because they're already insanely rich. They got rich in the 80s. So, they're just going to do their own thing. So the only way you can have a conversation with those guys, an effective conversation with those guys, especially about my things, is by engaging them through this format. It's a little slower, but not too much, and you get so much more from it. So why would you pass on that? Why would you say that this has no value? Vitalik said it had no value in one of his comments on Reddit. I asked him, why don't you write Casper up into a format that's acceptable for an academic conference and submit it? It's a novel protocol, $35 billion ecosystem behind it. You're obviously a very smart guy. So if you're so smart and you can know that we're violating an impossibility theorem, all these things, then obviously you should be able to get your paper through the peer review process. And the answer was, it's not proper. I don't believe it's worth anything. This is the philosophical difference between ourselves and EOS and Ethereum and other ventures in the space. If you believe what we're doing is right, ADA is your coin. If you think it's going to slow us down too much and not make us competitive, there are other ecosystems for you. What bothers me, though, are the politics of personal destruction, where it's not just good enough to disagree. We have to get deeply personal about things and say that people are idiots or people are bad human beings or something for following a particular process. That has to stop. Yeah, so the sidechain validation is pretty interesting. The way that Ouroboros is designed, you have epochs with slots, and it's probably going to be okay to have the slot leader make multiple blocks at the same time, especially if you have the notion of a stake pool, because that actor is going to have a much more powerful computer. So it's not inconceivable to say that that slot is going to maintain the state in lockstep of many chains concurrently. With fail-safes built in case one of the blocks is invalid, you can still maintain the persistence of the liveness of other chains. So for example, let's say we have KEVM as its own ledger, Plutus as its own ledger, Yella as its own ledger, and SL. Those would be 4 blocks every slot, and they would be separate chains. And then you have a subscription model where basically people can subscribe to the chains that they tend to be interfacing and using with, either as a light subscription or a heavy subscription, so light node or full blockchain. And the slot leader will just simply maintain all of that. Now, the good news is that you've just massively increased your throughput and you've effectively sharded. And Ouroboros has a lot of mechanisms within it to actually do that well. So that's part of our sidechains research, and it's part of our vision for SL and CL. Where it gets really interesting is when you start introducing this idea of elasticity, where every slot leader that comes up, maybe they maintain a few extra or a few down, and there's some economic factor of whether they maintain the chain or not, whether the chain pays rent or something like that. So this is where we're going to get really exciting into 2019 and 2020, because as the classical theory comes to an end and we've solidified all of that, and we move into the sharded theory and the multi-ledger theory and the chimeric ledger theory, that's going to be really fun because we can start talking about that and create models for that and so forth. The other thing is the sidechains research is all about representations. You have history, so the whole blockchain, and you're saying, how do I build proofs that are very small that can tell me lots of facts about that whole blockchain? Once you have that mechanism, then you no longer have this notion of a light user versus a full user. You start off by default with just this collection of proofs, and you know basically everything. Because anytime someone comes and makes an assertion, you can verify whether that assertion is correct or not, as if you had the whole copy of all history. And then the storage of history becomes a separate problem, whether that become a centralized file system or even if it's stored in a centralized capacity, there's some way to recall it. There's hundreds of solutions that you could throw at that. But the sidechain thing is really important. So these two things we're thinking really deeply about, and we're working real hard on, and we've been writing a lot of papers, and I think I'm going to have some fun with that. Let's see what else we got here. Yeah, RINA can run with current internet technology. Basically, you use something like UDP, you punch into it. So from the outside, it'd be like UDP with the VPN, and then it would be this really wonky internal network. Obviously, you could accelerate it if you had custom hardware for it, but RINA is just one of a collection of potential solutions we're looking at about long-term scalability. There are some great ideas like Poldercast, 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 which came out in 2012, and dozens of other things like that, which are partial solutions. And RINA looks like a way of doing a complete solution. And here's why. Basically, RINA is like a collection of foundational technologies that you just stick a policy into, and now you have something that looks like a totally different network. So you want pub sub policy, now you have it. You want a different network configuration like gossip, click in, now you have it, right? And so when you have that kind of flexibility, then all you really need to replicate a particular cryptocurrency is a policy as opposed to a completely new network stack. And that means you can really, really focus on optimizing performance and focus on optimizing correctness and getting very good predictability out of what you have. And then all of these policies basically inherit from that. It's kind of like saying, well, you're going to compile the Java virtual machine or to the CLR for .NET. And basically, when you do this, you get kind of predictable performance. So even though you might be writing an F# or C# or Java or Scala, you don't really have a big performance delta between these things because there's all this stuff that's been figured out underneath it that's helping you do that. And that's what RINA is kind of about. It's kind of like this universal machine for networking, and then you plug policies into it, and those policies allow you to replicate different networks. So I like the mathematical elegance and simplicity of that approach, and I like the fact that means I can focus super hard on getting it exactly perfect, and it's going to ubiquitously benefit not just Cardano, but all future projects as well as permission ledgers. The problem with RINA is that it's a very ambitious project. There's a lot to do. There's a lot of basic research to do. And even if we were to go completely gung-ho into it, it'd take years to get it all done. So it cannot be the condition upon which Cardano is successful. We have to have halfway house solutions, and we do have them, and we are building them and implementing them for Shelley, Gogan, and other steps in the network that will definitely provide us exactly what we need to be able to scale to large settings. It's more of a question of future-proofing in that we get reusability and we get a lot more flexibility. Furthermore, because you have policies being able to guide the network configuration, when you start talking about things like the needs of a smart contract or a private network or a multi-party computation protocol, you can now modify the network protocol in a very trivial way to be completely different to meet the needs of that. So, for example, if you go from the main network to a private off-chain network or something like that, you have some way of doing that in a very coherent way. So that's why I like RINA, and that's why I think that there's a huge amount of merit promised there. And for well over 20 years, people have been thinking about it in one way or another. And a lot of the pioneers of the internet do agree that something like this would have been nice to have had they got a do-over. As for the notion of specialized hardware, that's just a matter of making it run faster and more reliably and so forth. But you can interface with RINA using traditional internet protocols. Adds a little bit more fragility and brittleness to the protocol, but there are ways of mitigating that and so forth. It brings up a broader discussion of, well, is the internet we have good? The answer is no. It's terribly broken. It's broken because nobody was in charge. It's broken because nobody could be in charge, and it grew in a very asymmetrical and strange way. And then there's all these gigantic companies, content companies, that have a huge amount of influence over it. And all this weird policy exists. And so it has resulted in this kind of Franken-monster, and nobody's quite happy with it. And everybody talks about how over the next 10 years, we're going to fix it, like the Stanford Clean Slate Initiative, 5G. They said the IoT movement is going to force a fix to the internet. IPv6 will somehow force a fix to the internet. Software-defined networking will force a fix to the internet. And we've never just quite gotten there yet. So, of course, the RINA advocates say the same thing. They really believe in that. But, we all have our own book we talk, and we can't take ourselves too seriously. Okay, let's see what we got here. What else? Maybe one or two more questions. Is ADA working to comply with regulations of the U.S. government? That's a really interesting question because it presupposes that there are regulations for us to comply with. The answer is there aren't any. Regulation of cryptocurrencies has so far not been at the protocol level, but rather the use and facts and circumstances behind the use of the cryptocurrency. So basically, the idea is if you have a Bitcoin, you can have a Bitcoin. That's not a problem. But then if you choose to use that Bitcoin in a particular way, like sell it through an OTC transaction or in person on Liquid Bitcoins, or if you use it to buy drugs, or if you use it in ICO or something like that, you may inadvertently be violating a US law or state law or county law. So when you build these things, the first regulation point is the issuance side, and we're past that. So now the regulation point stems around the use and the facts and circumstances of that use. Now, that might change a little bit. There's a lot of open questions about, for example, how GDPR will apply to blockchains, and legal scholars are kind of haggling over that. And there's also a lot of desire to regulate in some way private cryptocurrencies and in some way give the government a backdoor. By the way, that's not a new debate. Apple ran into that debate. A lot of people who make cryptographic software have always run into that debate. Back in the 1990s, you guys might remember the Clipper chip debate, and boy, that was a tough one. So far, United States of America has no regulation that applies to us about things we have to do with the cryptocurrency as engineers, and it probably won't for the foreseeable future. That said, it is probably a really good idea to self-regulate in that it's a good idea to create standards that can benefit the community if followed. For example, there was a paper recently published out of University of Pennsylvania School of Law. It's about 100 pages long, and it's called Coin-Operated Capitalism. Now, that paper covered ICOs, and they went, I think, over 50 ICOs in 2017, and they even went into the source code itself, and they found that over 70% of the ICOs that occurred in some way defrauded the buyers, i.e. they made claims in the sale that were not represented in the code or conduct of the people behind the code. So when you have a situation where you have an institution where 70% of the time the person buying the token is in some way misled, and in some cases they don't even care because they can immediately divest the token on an upswing of the marketplace, that is a moral hazard. Whether the regulator steps in or not, it doesn't excuse the fact that that is a broken marketplace, and we do need to do something to fix it. Now, we could cry and complain and say, oh, that's a bad deal and we're bad people, or we could create standards where we could talk about custodianship and escrow and divestment and use of funds and community control over use of funds and so forth. And we can encode all of that up into best practices and create a standard. And then you guys, as buyers of tokens, could ask questions like, are we following this standard or not? And then self-certification and self-regulation can enforce this. For example, the purchase of Wi-Fi products. They say, oh, well, this is a Wi-Fi router. And I say, well, that's great. Does it comply with a known Wi-Fi standard like 802.11n or 8.11ac or something like that? Why do you ask that question? Because you have to connect your phone to it. You have to connect your laptop to it. And as a consequence, you have to rely that they're following the standard because your phone manufacturer probably never talked to that router manufacturer. So did the government step in and mandate to Netgear and mandate to Asus and these other people, you must follow that standard for that Wi-Fi product? No, the marketplace did. And we as consumers have an expectation for these things to work properly. So I think we can apply self-regulation like that to ICOs and to privacy, especially the de-anonymization of transactions using some notion of escalations. And we can end up getting much better systems that work globally. Wi-Fi works globally. I travel to dozens of countries every year. I have a phone. My phone can connect to the Royal Host Diner in Osaka, Japan. That same phone can connect to a diner in Ethiopia. That same phone can connect to a diner in Toronto, Canada, and in Denver, Colorado. Okay? And I never had a negotiation with these people. I never knew these people. And a lot of this hardware is made on completely different parts of the earth, and it's installed by different people, different languages. But that global standard works, and the international community didn't have to come together to figure that out. It just was markets naturally doing that. So I do think that that is the way to go. And I think that 90% of the moral hazards and issues and concerns we have in this space probably can be resolved there. And that slice of 10% probably doesn't require any new regulation because it's fraud. And fraud is fraud. If you buy something and you thought it was X and it turned out to be Y, and the person deceived you into thinking it was X so that they can get your money, they committed a crime in almost every country in the world. And, if you have good functioning judicial systems, you usually can get recourse either through a lawsuit or through some form of a criminal enforcement. And for the most part, criminals do go to jail. So I think we could self-regulate for the big stuff, and for the rest of the stuff, the existing system will work pretty well. All right, as a final question, what has surprised me the most about the Cardano journey? You never know how these things are going to go. We were very ambitious in what we wanted to do, but the reality is the ambitions were constrained to concepts that were not known by the public. Most people don't know what Isabel is. If you say cock, they probably think something different than what you thought you said. If you talk about things like bisimulation or things like peer review, they just have completely different concepts of that. And, we entered in on a different wavelength than the entire space. And that's really difficult to do. If you're too far ahead of the space or you're too distant from the space, people are not so comfortable and they might not come along with you. What has been tremendously humbling going all around the world, meeting people in the community, people like the ones watching this AMA, has been just how tremendously loyal and excited and passionate people are about some of the concepts we have. We tried not to break human nature with them. We tried to accept that we're flawed and we can make mistakes and we can get overly arrogant and in some cases get too big for our britches and tell people we're the CEO of a big company. But the market has a way of humbling you, and people have a way of humbling you, and people focus less on us and more on these concepts. I can't tell you how many people have read the Ouroboros paper. Grigori Roshu, a good friend of mine who runs runtime verification, when he did the KEVM paper and published it, I think there were more downloads in the first week of that paper from the Illinois website than any paper he's written in his life, probably all of them combined. He was just blown away by it. He said, I've never seen this type of response to a formal methods paper. This is a paper that maybe 10 guys read because, it's just the nature of the field. And they have 5,000 downloads for it. So that has been tremendously surprising. The other thing that has been surprising has been the quality of the conversations that I've had with people. When we talk about liquid feedback or liquid democracy, in some cases, we have people who've done pioneering work show up at a meetup or a place I'm at and say, by the way, the papers you referenced, I wrote. Wow. And you have a conversation with that guy or that gal, and they say, wow, it's pretty interesting that you guys are trying to use this. I never thought that was possible. Or I did, but there is an issue you probably haven't thought about. And you say, wow, that's incredible. So it's been a great journey, and it's been a very surprising journey. On the other side of the token, I don't think I was fully prepared for the negativity of the space. People aren't built to take criticism. No one's constructed in a lab. It's like building a human being to take a car crash or something like that. Criticism can be just as frustrating and harmful as physical abuse, and it psychologically comes at you. And you always ask yourself, like, what did I do to piss these people off? What did I do to make these people so angry, or to make these people think things that are just so strange? And what you can't do is let it bother you. And everybody says that, but it is hard at times, especially if the criticism comes from people that you consider to be friends or people that you thought you had a good relationship with, and for whatever strange reason, it comes their way. Partly you can justify it through economic incentives, partly you can justify it with the people changing and situations changing. And so that's that. Some of the criticism is strange, like we're an ERC20 token, or we don't have any code, or it's a scam, or it's just a white paper. It's like, well, how much objective reality do you have to throw at these guys before they understand they're lying to you? But you receive that criticism, and I wasn't completely prepared for that because I didn't live in a world where I endured that on a regular basis. So it has been pretty surprising. And it turns out that you have to build an immune system for it. And you have to build some controls and protections and checks and balances within the organization so you don't get too exposed to it. The other thing is that you always lose when you engage the criticism. I've never won. People have just said really horrible things. I've engaged and I look like a jackass. A great example would be with the MetaMask incident. I was sick. I was in Vietnam, had a long day, and I just learned that they got delisted. And, they're a very small venture, guys. There's probably less than 5 people there. So you're thinking probably one of those 5 people runs the Twitter feed. Why would they hire a dedicated person for such a small project? So you reach out to them, and I've reached out to hundreds of other people that same way, and I can't send them a direct message. If they don't follow me, I can't send them one. So I would have sent them a DM, but I couldn't send them one to them. So I follow them. I say, hey, send me a DM. And they send a message back, send us something at support. It's an open source project. There's no warranty. There's no expectation of dedicated 24/7 support. I have gotten hundreds of small open source projects send me that very same query. I've sent hundreds of messages out. They seldom get answered. I had a time-intensive question. So I just said, guys, come on. I've been in this space a long time, 7 years. You know me. I've done a lot. Could we at least be realistic here? If you want to ask me a question, I extend you the courtesy of a private channel with me. Could I have the same with you? That was my intent. Now, everywhere I go, I see people saying, I'm Charles Hoskinson, and it's even in this very chat, some people have done it, as if I'm this narcissistic guy. And, it's just, I've gone to thousands of places. I've talked to thousands of people. You can do a survey of them. I stay after. I've had tons of conversations. I go out of my way to be a bit humble. We follow a very humble development process. But now there's this perverse image that people have built up about the whole thing. Second, I eat. I'm a human being. I eat. You guys do too. It's a dirty secret, I guess. And you know what? When you eat, sometimes you take pictures of your food. It's pretty common in Asia. Ask any of your friends. And you know what? When you're traveling all around the world and you've had 16 hours of meetings, take a picture of your food. You have 100,000 followers on Twitter. You share it. You say, hey, guys, this is what I did today. I can't talk about private meetings. If I meet with a world leader and it's confidential, I can't talk about that. I can't talk about HR issues or personnel issues, but I can talk about the duck that I had. In a lot of cases, people buying for me because they're inviting me to a meeting or something like that. So I share it. And then they make a montage of all the food I'm eating as if it means I'm not working and I'm wasting investor money or something like that. This is I think the dehumanization and the fundamental unfairness of the social media notion of the space, the fake news of the space, as I mentioned earlier. And that did surprise me because in a way, it was like an invitation to people to kind of share with my experiences. I'm no different than anybody else. I just have this incredible luck to be the CEO of a company that allows me to travel all around the world and go to places like Africa and Japan and South Korea and China and Australia and South America and so forth. It's a very humbling thing. And I have this great medium where I can share those experiences blow by blow, what it looks like in the plane, what it looks like on the dinner table with the world. And there are some people who would rather interpret it as I'm bragging and it's a lifestyle rather than saying, look at this cool thing that we all get to experience together. That was pretty amazing to me. And, the result of it is you just can't share because it's weaponized against the company and the project, and ultimately it just hurts ADA. So as a consequence, I lose that avenue, which was quite therapeutic. So that's the positive and the negative, I'd say, the most surprising things that I've learned. Humbling to be able to have conversations with some of the most amazing people all around the world. And I'm really glad that we had an opportunity to interface. I met creator of the web browser. I've met a lot of really interesting people I never thought in my life I would meet. And that was just amazing. And it's so humbling. Negative side, I wasn't prepared for how harsh people can be or how brutal people can be. And I wasn't prepared for how people would react to honest gestures. So you take the good with the bad. That's just the way the cookie crumbles. That's just the way the life is. Anyway, I'll just keep doing AMAs. keep doing update videos. Looking forward to 1.4. Thank you guys so much for attending, and this was a lot of fun. I'll see you sometime later. Cheers.